Hey guys, welcome back. Well, we reached Friday, probably not the day we were all looking for today, probably not the way we wanted to finish the week, but it was clear to me that the risk on, this simply wasn't a risk on, risk off kind of trading day. It is clear that capital and sentiment is starting to move within the AI infrastructure stack. It's exactly what we saw this week because the memory and the storage players, they sold off. They tried to rally, but that rally was just flat out stalled today. And I'm going to show you that in the Micron candle chart. But the optical players that we have been tracking this week and talking about a new bottleneck that is emerging in the market, they continued their explosive growth today. They had an amazing week across the board. So that movement and sentiment shift that we're seeing in the market right now that we saw this week, it raises a question that we should all be examining. Is Wall Street abandoning the memory trade, or are they just simply shifting towards the next physical bottleneck in the market? So today we're going to break down the exact headlines that are driving that sentiment or shift today. We're going to talk about the Citi downgrade. They didn't reduce Micron. They still maintained the buy rating on Micron, but they did move the price target down from 1,400 to 1,150. This is the first major institution that I've seen reduce a price target on Micron. So let's break it down. Let's talk about why they reduced their price target. And then I want to talk about the $38 billion capex expansion by SK Hynix that they announced and why that drove negative pressure and sentiment on Micron today as well. And finally, we'll finish talking about the optical players and why they're being called the next memory sector. And also, we'll examine the case on can Micron break the $1,000 psychological barrier again? Can it break through and get above 1,000? That's what we're going to cover in today's video. If you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Guys, let's jump in. Let's take a look at the action we saw this week across not only the memory, but the connectivity players as well. Let me pull up that graphic. You can see this is the price change that we had from Monday to Friday. So it's a 5-day price change. And you can clearly see on the left side is all of the optical, the connectivity players, and what an amazing week they had. We've talked about Applied Optoelectronics. They had their earnings this week, strong earnings. But look at the change, over a 50% change for their stock price this week over the last 5 days. Coherent, over 48%. Lumentum, 30%. Corning, almost 23%. Marvell, almost 21% growth. Astera Labs, with their earnings this week, went up over 12%. Broadcom, great to see this stock moving in the right direction again. Over an 11% change this week. And finally, Arista Networks at an 8% change. And then if you compare that on the right side to the Fab 5, to the memory players overall, you see Micron had a solid week. It probably didn't feel that way, but it was up 12% over the last 5 days. SanDisk, a 4% change. A lot of jumps and a lot of volatility with that stock. But then Seagate was down roughly flat, down about a half a share point. SK Hynix, their ADR was down 1%, and Western Digital just got absolutely hammered this week after their earnings drop. They continued to have pressure throughout the entire second half of the week. So that is the reality we're seeing in the market right now. It is clear the sentiment is shifting. We're starting to see kind of the optical players become the next big player because of all of the news that we're seeing around the constraints in the bottleneck in the market here. If we just jump over to memory first, though, before we get into the optical players, let's talk about a little bit of what caused the sentiment shift or what put the pressure on the memory stocks today. You can see what they did today. That last graphic was a 5-day change. Here's a 1-day change. So Micron was down about half a share point today, just under $4 off the stock, closed at $877.57. SanDisk was down just under 4% at 3.7%, $46 off the stock. It closed the week at $12.21. Western Digital, as I mentioned, had a lot of pressure, down $17 today, almost 4%. It closed at $4.34. Seagate, you can see, was down $40, almost, just a little over 4.5%. And then SK Hynix at about 4% down today, a little over $5.50 off the ADR. So that is what we saw today. You can see in the after hours on the side, pretty much holding flat, with exception SanDisk, which is up about $3 right now. But what drove this sentiment? Clearly, this was the biggest one. I said it in the beginning, is that Citi cuts Micron's stock target. It sees memory chip pricing peaking in the second quarter of 2027. So let's go through some of the details. And you can see that Citi slashed the price of Micron from a 1,400 to 1,150. They kept the buy rating, but they are citing a more tempered outlook for DRAM and NAND pricing heading into next year, and that's what they're using to justify their price reduction. The bank trimmed the target, applying an 8x price to earnings multiple on revised calendar year 2027 EPS estimates, down from the prior 10x multiple they were using before. The reason they did this is based on meetings that they had during the Future of Memory and Storage convention that happened this week in Santa Clara, California. So they mentioned they had meetings with memory supply chain participants and third-party experts, and their core takeaway was that price momentum in both DRAM and NAND is real, but it is fading. We see both DRAM and NAND prices decelerating quarter over quarter in the next 4 quarters, with prices peaking in the second quarter of next year. In the second half of 2027, Citi now sees DRAM prices down 3%, half over half, versus a flatter prior view. For NAND, the second half of 2027 is now projected down 5%, half over half. The firm cut its fiscal year 2027 and fiscal year 2028 EPS estimates by 1% and 2% respectively. So that's Citi's view. And to be fair, they're the only stock that has, the only company that has reduced the price target. So I'll drive down and just show you that, but you can see the reduction here. It's still a 31% upside from where the stock trades today. I mean, we had Think Equity. I didn't even share this with you earlier in the week. That went from 60 to 900. $60 price target on Micron is wild, but they finally put it at 900. But this is something we'll have to continue to monitor. I mean, I think we have a lot of conflicting stories talking about price constraints to next year. Many of them are mentioning that prices will even be higher, the average selling prices for DRAM and NAND. So we will have to see which one plays out correctly as time moves forward. But I wanted to bring this to your attention because it's clearly the biggest sentiment that is driving down the sector, driving down Micron today. And if we jump over to another story, was SK Hynix. SK Hynix, a $38 billion memory splurge. Barron's article here says it's no problem for Micron stock. But this was also sentiment in the headlines that drove concerns around a supply glut with the memory sector. And if we dive into some of the high-level stories, you can see that SK Hynix are the high-level takeaways from this story. But SK Hynix said Friday that the board approved a $54.3 trillion, which equates to about a $38 billion in US dollars investment for new chip fabrication facilities in its home country. So the piece why they say we shouldn't be concerned is just that we know the reality of how long it takes to build out these fabrications. And just by mentioning that they are investing $39 billion, just over $38 billion, it does not mean that we're going to see this supply into the market overnight. We know these chip fabs, they take years to build. And so SK Hynix, they explicitly stated that this clean room, it won't even be open until June of 2029. And the M17, the other fab, it won't open until late 2028. And just think about what I've highlighted here on Micron's, that $100 billion project they have in Clay, New York. They announced that in 2022, and it won't produce a single commercial wafer until 2030. So UBS estimates that roughly 60% of all capex right now, the increases for that in 2026 are coming directly from memory prices, the higher prices that they drive in the market right now. And expanding that to 97% of all capex for these memory providers are coming from the prices and coming ultimately from the buyers, the higher prices that they're driving in the market. So near-term supply is still locked tight, according to this article in Barron's. And that fact, we even have another level of protection because it is the long-term agreements that they have in place as well. But there was another flag that we called out that in the other article they called out. It was around the Chinese players mentioning their aggressive moves, both CXMT as well as YMTC, YMTC is a NAND player. CXMT is roughly in DRAM overall, but they were concerned about their desire to build out more supply overall. And the bigger piece there was that there are probably going to be U.S. restrictions. So we won't see those chips here in the U.S. market. But what the author mentioned is that could be a concern to Micron's international pricing it could impact the leverage they have in the European markets and other markets around the world. So when you add all those three stories that we saw together, we saw the Citi kind of moving the price target down, this announcement from SK Hynix, and the ongoing concern around the Asian memory providers. That just created a classic kind of post-earnings sentiment reset for the entire sector this week. And that's the squeeze that we saw. If we jump back over here, what you're seeing today, but also kind of what we saw across the entire week, if you look on the left side there. Although I will say Micron still had a pretty good week, despite all of the kind of all the choppiness they needed to navigate. But let's jump over to the optical players, because it was a completely different week for them. You guys saw the massive changes they had in the 5-day. Just look at what we saw for the 1 day today. So Lumentum was up over 6%. Coherent was up over 13%. Applied Optoelectronics, another 9%, 50% for the last 5 days. Corning was up 5%. Marvell, almost a 4% growth today. I even get a little lower. You can see Astera, just over a 1%. Arista was down 2%. Fabrinet was about 3.5%. IPG was over 4%. Macom 3%. I can go on and on into the list, but you'd get the takeaway that we are seeing significant capital shift over into the optical players. And the reason why, I think this article sums it up perfectly, is it says 3 signals across the AI stack. So they talk about the agentic web, the optic squeeze, and SpaceX debut. I want to dive down to that second story, which is the optic squeeze, because this is what we are mentioning in the videos. It's not only what Lumentum CEO mentioned around the bottleneck with INP, but it's also this new regulatory situation that could restrict the Chinese companies providing components into the U.S. data centers. And that sentiment just drove significant action into these companies this week. You can see what the article says here is that optics is the new memory. If memory was the value chain trade this past year, optics is shaping up to be the trade into 2027. This week handed the thesis both a print and a policy catalyst. So the print was obviously Applied Optoelectronics earnings that they dropped. Remember that Coherent and Lumentum both have their earnings next week. So we'll track those on the channel. We'll bring the high-level results and what it means to the sector and the strength that those earnings show. But if we look at Applied Optoelectronics, their revenue grew by 86% to a record $192 million. It's its 5th straight record quarter, and it swung back to profitability. Data center did the heavy lifting, was up 140% to about $108 million, as the 800G transceivers more than doubled sequentially and became the majority of their mix. Management guided for the next quarter to be between $255 and $290 million, and the full year to be roughly $1.1 billion. And they said that the order book is already full through the mid-2027, gated only by how fast it can stand up manufacturing and secure components. And the policy was the second catalyst. And this is what we talked about earlier this week on the channel, how the FCC is drafting a rule that would ban new Chinese-made optical transceivers from U.S. data centers. So optical names, they rallied on the read that demand would simply be redirected to the Western suppliers. Just take a look at the optical transceivers mix. 65% of that right now is supplied by Chinese suppliers. If we had a ban, that would be an immediate bolus to the North American providers that you see on the list right there: Cisco, Coherent, Lumentum, and Applied Optoelectronics. So this is a big story overall, but there is kind of a layer of concern underneath. And this report calls it out. Because remember, they moved to this week based on the print that we saw from Applied Optoelectronics, also the bottleneck that was called out in INP, and then this potential policy change. But this report is saying that a China transceiver ban would actually hurt the U.S. giants. And the reason why, it's all around capacity. They say Coherent and Applied Optoelectronics are the most directly exposed U.S.-listed beneficiaries of any restriction, according to Raymond James. Yet counterpoint analyst Neil Shaw, he cautioned that both Coherent and peer Lumentum currently lack the clean room capacity, automated packaging infrastructure, and yield scale to absorb the amount of capacity that the Chinese manufacturers are delivering to the U.S. market right now over the next 12 to 24-month horizon. So hyperscalers like Amazon, Microsoft, Meta, and Google, the consequence of a rush ban would be costly to those companies. Shaw warned that the capacity deficits would produce a cost escalation and delayed AI customer deployments. So not only would it be costly, think about this, it wouldn't be just costly to the hyperscalers, but if they are delayed cluster deployments, that would hurt the compute players, the memory players, and all of the other companies that are involved in building out this AI infrastructure stack. So a rushed, kind of any type of rush ban would definitely have impact across the entire scale, across all of the companies overall. Any sudden regulatory shift, it risks creating hardware bottlenecks that could slow down deployment schedules for the world's largest cloud operators. So it's a significant tailwind for these companies, but it could present some headwinds that we may face down the road as well. So kind of a double-edged sword that we just have to think about and consider. And if we jump back to Micron, I want to finish up the video by just looking at what they did today. So we saw Micron pretty much flat, about half a share point down, closed at 877. If you look over here to the right side, the daily range, it got up to 904 today, got down to a low of 847. We're seeing in the after hours, it's up about $2.50 right now, about 880 a share. But all of that immediate price action was right in the beginning of the day. So it gapped up immediately to that high of 904 and then kind of scaled right down to the low within the first hour or so of trading, down to the low of 847, rallied back up, and then just didn't do anything the rest of the day. It wasn't necessarily an exciting day. It was just a sideways kind of digestion across the day. The volume was pretty low today. I think it was about 35 million shares. The average is about 45, 46 million shares for Micron. So it was a pretty low volume day across the board. But there were a couple things I want to call out. One is the stock block trades. So a few that I want to call out. The first one is the opening cross. Not a huge, remarkable opening cross, right? 125 million, just under 139,000 shares. So again, low volume day today, but this did kind of pop the share a little bit up. This was the momentum we saw right out of the gate in the morning. But then we started to see this kind of scaling down. We just had this battle in the 860s here. You can see I'm circling these trades until we finally got to the afternoon session at about 109, where we saw that, remember, we saw that little bit of conviction that scaled up to that flat line. But this is a $131 million stock trade, about 150,000 trades right at the 873. We did see a really nice kind of closing cross, not a huge one, under $1 billion. We typically see well over that for Micron, but it was over 1 million shares right at 877.57. But immediately 7 seconds later, we had a $360 million trade, over 400,000 shares at 877.57. And then we had this massive trade here later, about a minute and a half or so, a little under a minute and a half after the market closed, of $706 million. 800,000 shares for Micron right at the end, right at that 877 level as well. So for me, guys, I think this 706 million dollar block trade doesn't prove anything that with regards to sentiment. It's just institutional buying, but it does prove that an enormous amount of institutional size liquidity changed hands right at this 877.57 level for Micron. And if you combine Micron's recovery from that low today that we saw of 847 to where we did, if you combine that with all of the stock block trades we're seeing right now, you can notice that this is going to become a very important price zone for the stock and something for us to watch overall. Is at 850, kind of the 877 level. It tells us that while the short-term momentum failed at 900 right out of the gate, it kind of got pushed down. It failed to stay above that level. The institutional dark pool money was aggressively soaking up the supply in that 860 to 875 range today. So this wasn't panic dumping, in my opinion. This was institutional cross trading and rebalancing day for Micron. So let's keep our eye on that level. We're above it right now in the after hours at 880. Let's see what we do as we move towards the opening bell on Monday. But then the last piece I want to cover with you guys is this article that talks about, can Micron reclaim the 1,000 level? And so let's go through some of that, because it says Micron has already been to 1255. We know he did that in June 26th. So 1,000 isn't a moonshot for this stock. It's a reclaim of ground already conquered. Currently, the stock price, it says 878. Its stock sits about 14% below that psychological barrier. But it's backed right now, but backed by earnings that have been beating estimates 3 quarters in a row. If we go down to those earnings, you see the earnings are doing the heavy lifting. The fundamental case is hard to ignore, hard to argue with for Micron. We had 3 consecutive beats. You can see from December, March, and June. The earnings per share surprise was an average of 27% increase or surprise over those last 3 beats. The revenue surprise was over, and look at the price action. In the last earnings, there was a 15% price action overall. The revenue came in at 41.5 billion versus 36 billion estimate. It was a beat that sent the stock up 15.5% on earnings day. The earnings per share consensus has been revised up 794% over the past year, signaling analysts are moving to catch up to Micron's reality. And look at the growth runway. They said it is steep. Look at the earnings per share. So it's estimated to be $73 for this fiscal year. Next fiscal year is $154.67. Look at the revenue estimate. Estimated to be about just over 129 billion. Next fiscal year, 2027, it's estimated to be just over 249 billion, a 93% year-over-year increase. The next earnings, we know the big catalyst date for this stock is September 29th. But remember, on Monday of next week, we have a massive catalyst as well. We have Micron's Investor Day. This is hopefully going to drive some real positive sentiment for the stock. It is really important for their leadership to take the stage and share some positive outlook for this company right now that will drive positive sentiment moving forward. They need to speak to the demand. They need to speak to the price constraints and the price leverage that they have in the market. That's what I'm looking for to see on Monday, because the September catalyst is a little bit of ways towards the end. But if we just base, if you remember that article with Citi, they said an 8x PE multiple. If we base that 8x PE multiple on the revenue, the earnings per share next year of estimated of 154, that would put the stock price at roughly $1,237. So can it get through 1,000? I think it definitely can. It can break that psychological level. If we go down to the verdict here, it says 1,000 isn't a question of if the fundamentals support it. They clearly do. It's a question of timing and sentiment in the market. So with the next earnings on September 29th, already estimating a $31 EPS, another beat could be the catalyst that bridges that 14% gap of where we see the stock trading today and the $1,000 level that they've already conquered. So the path of least resistance points toward 1,000 being a floor to reclaim, not a ceiling to crack. So I like that article. I thought I wanted to share it with you guys overall. And then in closing, I would say if we look at kind of the trading action today, the short-term profit taking and the capex headlines that we saw from SK Hynix today, it pulled memory back. The sentiment shifted, but we're also seeing the sentiment shift towards the optical players right now. We're seeing those bottlenecks or constraints in the market that is driving capital and driving kind of focus towards their way. But remember, memory's multi-year structural cycle, in my opinion, is far from being over. So don't mistake rotation for rejection. Wall Street doesn't necessarily have to sell the AI infrastructure thesis to take profits in one bottleneck and move capital to the next one. Memory can remain structurally bullish while optics becomes the higher velocity trade that we see in the market. The question we're trying to answer isn't which theme is dead. It's where the scarcity is in the market right now. And therefore, where is the pricing power in the market and where is it moving next? That's what we're trying to solve right now. I think that's the question we all need to continue to examine. So guys, if you found this deep dive helpful, if you learned something from today's video, make sure you hit like, make sure you subscribe to the channel, drop a comment below, and I'll see you guys in the next one.